Let me know when you're ready.
Okay, we're good to go.
All right, great. First of all, I got to write him a check for saying all that good stuff about me now, right? He said exactly where I wanted him to. No, I'm just kidding. But anyway, guys, brothers, welcome to this call. I am delighted to be on this call. I'll be on a lot of Zooms that people actually hire to be on to talk to a guest of people. And I tell you, it's just absolutely been amazing. This weekend, I'm actually, as you saw, some of you guys saw in the group me, this has been a crazy weekend because this is my Calumet class high school reunion weekend. And last night we had the meet and greet as well as um, let me make sure I've got my screen up here good. Okay. The meet and greet and everything. And tonight is the banquet. And then tomorrow we got the cookout and everything. So it's just been a long weekend. And I'm on the committee, running the committee actually. And so we got a chance to see a lot of people I haven't seen since high school back in 1978 when we graduated. So with that being said, yeah, I'm still 45. Yeah. So I want to welcome you guys on this call. I'm gonna give you guys some serious gold nuggets. So I would strongly suggest that you grab a pen and paper if you can, take you some good notes, because the information that I'm going to share with you guys is information that people pay me for big money. All right. So I would take that and run with it if I were you guys. Okay. But before I get started, I want to make a disclaimer that I always have to make. First of all, my disclaimer is that I'm not an attorney. I do not give legal advice. The information that you are going to receive is for informational purpose only or educational purpose only as well. If you need legal advice, I would say you have to seek a competent attorney for that advice. Okay, so we're all clear on that, right?
Yeah.
Okay, I see a lot of people on mute there. That's okay. So anyway, just keep in mind this is for educational purpose only. But believe me, you're talking to someone that's has 45 years of knowledge and experience. I am self-taught. What got me involved into the credit game when I was at a very young age. I was at a car dealership actually, and I didn't know anything about a credit bureau or credit report or credit report machine or anything like that. And I noticed as I was sitting there waiting for my salesperson to come back, because I just basically there just asked some questions about some vehicles, a couple of vehicles that I might have been interested in. I wasn't getting both of them. I just wanted to know some information. He thought I was going to buy the vehicles, but as I'm sitting there waiting for him, I noticed a couple in the next cubicle over from me actually was being rejected for their credit. And all I saw was when I looked over, because there was a little see-through, you can, plexiglass, whatever you want to call it. Um, I looked and the salesperson had a piece of paper in his hand and he came back and I can overhear them talking, ear hustling, as we call it now, right? That they were turned down based on some information that was on their credit report. So I wanted to find out what the heck is on who's on the other side of that machine and generated this document saying that these people was not eligible and they didn't even see them face to face. And that's when I learned about credit bureaus. When I got into this industry, there were five credit reporting agencies. You had companies like Shilton, Pinger, TransUnion, TRW, and Equifax. Those were the companies that were still in existence. Okay. Now, at that time, now we have three majors. We have
Oh,
TransUnion, Experian, and Equifax.
Eagles is
But
on the.
all three of those, all three of those,
Yeah.
we got some background going. Okay, we have all three of those credit reporting agencies feed off of a company called LexisNexis. LexisNexis is the information base for all the credit reporting agencies. And just so you know, it's more than the TransUnion, Experian, and Equifax. There's over 250 plus credit reporting agencies, which are called third parties, who feed off of these LexisNexis companies. If you were able to pull up your LexisNexis, which I suggest everyone should do, and be prepared for some of you are going to have well over 300 pages. Because if you was married before, if this is your first marriage, your second marriage, if this is your third marriage, you're going to see information on there from your very first marriage, your second marriage, and so forth. So I encourage everyone to pull their LexisNexis credit report because that's what the big three pulls off of. You're going to see some stuff on there that you're not going to believe is unimaginable. So get on the phone with them. Whoever answers their phone going to have a pretty bad day because they have to help you right then and there. If they tell you it's too long to do, no. I get tell them you got time and go ahead and have them to start start disputing some things so they can start deleting. At most time they just start delete, 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 delete. So you got to do that. It's very important because what reflects on that Lexus next report is going to reflect on the rest of your life because that's what the three major credit reporting agencies go off of. Okay. So everybody got me on that. Let me see your show of hands. All right, great. So I'm just doing that for the ones that are on mute. Okay. So make sure everybody can hear me clearly. Now, what I'm going to do real quick here is, with that being said, I'm going to cover a few things here. I'm going to get the financial planning and growth out the way first. When we talk about financial planning and growth, that's financial planning, guys, is very important because you can't get ahead in life without financial planning or growth. You got to. I have a terminology that I use. You got to learn how to keep your money pregnant. Okay. You got to learn how to keep your money pregnant. You see a lot of wealthy folks around and you wonder how they're able to do good. Here's my question. Here's my question. What if you had two same individuals? Let's say you and I went to the same grammar school. We went to the same high school. We graduated at the same time. We took the same tests in school. Now we get out of school, we graduate. Now, how is it that one becomes successful and the other one does not become successful? They living from paycheck to paycheck. Okay. Now follow me on this. How's it that one is successful financially, credit worthy, and the other person, same education, same everything. You guys grew up together, that they're poor or they can't make ends meet. Okay. The question is, we all have 24 hours in a day. The question is what are you doing with your 24 hours? See, because with me, I give you an example with myself. While a lot of you are sleeping, I'm humping, I'm working. I'm up at 3 o'clock, 4 o'clock in the morning, working on files, helping people change their lives while they're sleeping like babies. Because see, my work don't start really until it's over. Okay. Now I'm gonna say that again. My work don't start until it's over. So you may say, well, what did that mean? It's never over because there's too many people out here that needs help. Now, with that being said, when we talk about financial security, what is why financial planning matters is basically what I'm saying. The reason why it matters is because it creates stability, security, and also it's freedom. Now, I'm telling you guys, you want that freedom. It's a beautiful thing on the other side. I'm telling you, the air is better, the people are nicer, okay? The conversations are different. It's a good thing when you could be around people having conversations talking about what you want to be part owner of or be an owner of, in opposed to, oh man, I can't pay this or I can't pay that. I'm not knocking people who have issues with paying things or anything like that, but I want to show you how you can get on the other end of that. We all heard the terminology, the grass is greener on the other side. No, it's not.
Yes.
You just have to water your side of the grass. Okay. I'm going to say that again. If you think the grass is greener on the other side, no, it's not. You just have to water your side of the grass. All right. You got to fertilize it. So, what did that mean? In the credit industry, you got to guard your credit. You have to guard your credit. But before I even talk about that, let me just finish the subject here about the financial planning because I don't want to get ahead of myself. So, what is the key ideal? I just jot me some notes down here that I want to just make sure I stay on track with here. What is the key ideal of the financial planning? Yeah, okay, it's a financial plan is about restrictions. Okay, I'm sorry, it's not about restrictions. It's about direction. I'm gonna say that again. Financial plan is not about restriction. It's about direction. You have to know what direction that you want to go. Because I always tell people this, guys. If you do not know where you're going, how do you know when you get there? I'm gonna let that sink in for a minute. If you don't know where you're going, how do you know when you get there?
It's hard to know when you there.
My point exactly. Okay. So the main thing is that I want you guys to understand is that my boy Les Brown says it the best. You got to be willing to do the things today that others won't do in order to have the things tomorrow that others won't have. Okay, because when life seems to knock you down, you got to land on your back. Because if you can look up, you can get up. Okay, I want you guys to write that down. because that's very important. And I live by that every single day. When life tends to knock you down, you want to land on your back because if you can look up, you can get up. You can't get up if you're laying face down, right? You got to do some things. Now, with that being said, let's talk about the building blocks of financial planning, and then I'm going to get into the nitty gritty with the credit and debt collectors and debt buyers and so forth. And you guys going to really want to take some good notes on that because there's going to be some genuine gold bricks there. Forget the nugget part; that's the brick bars there. Okay. With the budgeting is track income versus expenses. And in this industry, we call it 50/30/20, and that's the 50/30/20 rule, and that's needs, needs, that's needs, wants, and savings. Needs, wants, and savings. Okay. And when we talk about that, one thing that you want to understand with financial planning, that is very, very important because if you don't have a structure in your life, I'm telling you, man, you're gonna be miserable. I don't care if you're doing it as an individual, if it's gonna be in a marriage, if you're engaged. I consult with people that come to me as a consultant that want to talk to me before they get married. And because here I experienced it a lot, being in this credit industry all these years, where you have one party, let's say the female that you're getting with, let's say her credit is fine, everything is great, but your credit is nowhere near great. You can get a piece of bubble gum, and I'm just using this just for an example, guys. Okay, and so therefore, what's going to happen in that relationship is that when you guys start buying things like a home or car together, so forth and so on, everything's going to have to be in that person with that good credit's name. Some of you guys experienced that already. Okay. That good credit, that credit gonna have to go in that person's name, and then all of a sudden you're gonna feel kind of bad because and then the conversations are gonna be different when things starting to happen. Do that make sense? With a show of hands.
Hands.
All right, y'all talk to me now. I'm here for you. Okay. We got a lot of people here that I'm just seeing some faces and some names, but I can't see your faces. Okay, but this is what I want to say to you. Okay, you want to make sure that even when this is a consultant now, I'm giving you some consultant information here real quick. Before you get married, you talk to that partner, man. You find out what's going on with their finances, what's going on with the credit. Not saying that, excuse me, not saying that you don't want to be with that person, but you need to know some things because that's going to follow you throughout you guys' lives when you get married and so forth. You got to start working together on what's going to happen. What we can do right now to make this thing better, make this relationship better, make this marriage better, and so forth. Now, with that being said, you want to put yourself on a 3 to 6 month plan for emergency fund. Okay. A lot of people living paycheck to paycheck, but they don't have no money for when that emergency happens. If you own a home, you got plumbing problems, you might have electrical problems, you might have some type of problem, roofing problems, whatever the case may be. You got to have a 3 to 6 month cushion, to take care of something. If you lose your job, you lose your source of income, you got to have a cushion. Listen, guys, every time you get a paycheck, you want to save 10% to put in your pocket. I'm gonna tell people this. I'm a big tither. I'm a firm believer in tithing. Okay, so my first 10% is definitely going toward the church and so forth. And I don't take mine and just put it on one church. I split it up among several churches, but my church will get a nice amount of it. But I like to split it up with other churches that I know that's doing something out there for the public as well. And believe me, they love to see me when it comes to tithing day. Okay, for those Sundays. So you want to do a 3 to 6 month cushion because if you just using your money to pay bills, okay, I'm telling you, you're really, really setting yourself behind that eight ball, and that eight ball gonna get knocked out. Believe me when I tell you that. Okay. Now, with that being said, so that cushion protects you against the job loss, medical bills, etc. Because medical bills could pop up anytime. Some of you guys experienced that already. It's a blessing right now at this moment that medical bills no longer can be reported on a consumer credit file. Okay. And I'm going to talk about consumer credit file in a few minutes because keep in mind, I just write that down, consumer credit file, because I'm going to share something which is going to blow some of you guys' minds about that. And also write down credit reporting agency. And I'm going to explain that to you later because what you've been thinking you knew about the credit game is not true. Okay. Some of the terminology that you've been hearing, and I'm gonna really blow your minds with this. Okay, now with that being said, let's move forward, and then we're gonna be finished with this particular topic. Let's talk about the debt management, good debt versus bad debt. I like to look at it as like a snowball. When you get a lot of credit cards or anything like that, you want to take care of the smallest debt credit cards first, okay? And then you want to start taking care of the high interest credit cards. Now, I have heard in the past people say, "Oh, why not take care of the high interest credit cards first?" Reason why, because that number, the payoff is too high. That number is too high. Start with the lowest one first, and then gradually go up to the next highest credit card, the next one, and the next one, and so forth and so on. Okay. In this industry, when paying off credit cards, just like with anything else, there's a plan to that. But that's something I'll share with you guys on another call because it's just too much right now information to try to put out on the small limited time that we have today. Okay. So everybody got me on that so far? We good? Show of hands. Okay, for those who I can see, that is.
Hands.
Okay. All right. Let's talk about I'm going to skip over that one there. It's going to get a little too much into it. But let's talk about protecting that wealth. Now, when I say wealth, I'm not talking about you have to be rich or anything like that. But when you have uh, a plan, that's what we call wealth. Okay, because if you don't have wealth, you don't have a plan. Okay, if you don't have wealth, you don't have a plan. All right. When we talk about that, we talk about insurance. That's health insurance, disability, life, property. Risk management, not just cost. Ladies and gentlemen, if you are under the sound of my voice, which you all are, I would say make sure that you focus on getting some type of insurance. If you're living in a home and you don't have, and your house is paid for and you do not have homeowners insurance, you are playing Russian roulette. Because every time, either if you smoke or especially for those who smoke in bed, and you would not believe how many in the past cases that I have dealt with people dealing with their insurance companies and so forth that sued them for this or that, the other, and how it became effective on their credit because when they paid out something for a claim and then they found out this or that, and then therefore they wanted the money back, and now they put them in collections and so forth and so on. You guys would be amazed of the type of cases that I deal with, not just credit. I don't like the word credit repair. I use the word credit rehabilitation, okay? Because that's what we're doing. Now, let me fast forward here because I really want to get into the nitty gritty of this because this is what a lot of you would be interested in knowing as well. And I want to talk about real quick the do's and don't of credit, real quick. First thing in the do's or don't of credit reminds me back in the day of people co-signing, okay, for a family member, for a daughter or son or sister or brother, whoever. Um, I've been asked many times, what is my thoughts about someone co-signing for someone? And I'm going to sit here and tell you that I do not encourage anyone to co-sign for anyone. Why? Because that means you're going to be the main person that's going to be on the hook. And you can rest assured in 45 years of doing credit, can you imagine how many clients that I have and had and have today that dealing with issues with co-signing? For their family
Over
members, for their
80%.
loved ones. I'm sorry,
80%.
more than that. Okay, and what happens is that then you have the family members, they fall out. The friends will fall out because they're not doing what they're not supposed to do, and what they're supposed to do rather, and now they don't have no skin in the game. But the bottom line is that in my professional opinion, I would say never ever co-sign. So if you're gonna write anything down, write that down, okay? Because it's going to come back to you and it's going to hurt you real, real bad. And it's going to stop you from getting things and moving forward as well. And then, like when you get into a engagement or marriage or whatever the case may be, it's going to affect you, rest assured, because you got to get that cleared up before those things happen. Okay. So now, with that being said, moving along, negative credit equals high interest rate on credit cards. Also, it lowers your credit card limits. And I just have a saying, guys, and I just got to be frank with you. I have a issue with it. When I tell people this all the time. Hey, grown folks ain't got no business having a $500 limit credit card. Okay. because as soon as you spend $200 on that, you done pass 30% of your utilization. Okay. I'm gonna say that again. If you have a $500 limit credit card, okay, as a grown person, to me, that's a college kid credit card. That's a kid who just went to college, to buy some knickknacks, at school or whatever the case may be, right? And I always tell people, don't put the dollar amount on a credit card if you know that you cannot write a check to pay it off. I'm going to say that part again because that's very important. Never put on a credit card a dollar amount that you know that you cannot pay off with cash. If you cannot go to your bank and pull that money out that account, do not put it on that credit card. Don't fall for the okey doke with the entrance. If you let that entrance kick in past that statement date, you're going to be responsible for whatever interest rate that you have on that credit card. That's how they make their money. The credit card companies have never, ever made interest off of my credit cards. Never. I use them. I don't let them use me. Okay. We have what we call the 10 method. Okay. 15 days before the statement dates. I'm sorry, 15 10, 15 5. I'm sorry, 15 5 method. 15 days before the statement date. Pay half of it off. The other half is that you do it 5 days before your due date. Never go past your due date carrying a balance. If you can help it, please don't go past that, because if you go past your due date, guess what? You are going to be hit with that interest rate that's on your APR. Some people got credit cards, man, that's, gosh, 20%, 24% or higher. To me, you would never. I'm going to give you a good example. If you had a credit card and you put $2,000 on a credit card, and let's say you got a 24% interest rate. Now, some of you guys say, man, that's a small amount. So if I put, I'm gonna say 2,000. If I didn't say 2,000 at first, I'm gonna say it again. 2,000. I think I said 5,000, but $2,000 credit card. Make it simple. And you got a 24% interest rate. Do anybody here have any idea as to how many years it would take you to pay off that $2,000 credit card with a 24% interest rate? Y'all could jump off of mute if you want to, real quick, because I want to hear anybody. I want to hear some answers to that. Do anybody
About
have any
First,
idea?
5 years.
Say it again.
5 years or three.
Okay, we
7
got 3 years.
years.
30,
How many?
5.
Okay, I hear
30,
7.
5.
it'll take
30,
12 years.
I hear 12 years.
30.
Okay, I think I heard a young lady saying something too. No?
She
Okay.
did. She said 7.
Okay. Somebody came real close. It's going to take you
7.
at least someone said 7. Okay, it's going to take you exactly, listen to this clearly. Someone hit it right on the head. It's going to take you roughly around that 12-year period to pay it off. Why? Because if you, the next month when it rolls around and you still don't have it paid in full, guess what? You're still getting hit with that interest rate. It's compounding. Okay. And then you have your daily interest that's tacked onto that as well. You got to read that fine print. Okay. You got to make sure that you get those credit cards paid off before the due date. Okay. Now, someone asked me, how can you hack the system? Well, I don't know if it's a word saying hack the system, but this is how you can kind of get around certain things to make the system think that you made two payments. Doing the 15-5 method, 15 days before the statement date, pay half of it, and then pay the full balance, the other half, 5 days before the due date. It looked like you made two payments. But if you make a payment, say your first payment, they're going to treat it as a minimum payment. So they're going to say, oh, you don't have to pay us until next month. Don't fall for that. You better make that payment before the end of that due date, because they are hoping that you are going to be the so-called, what we call the unsophisticated consumer or debtor, and that you're going to fall for that, because banks do not make money if you pay that before the due date. Everybody got me on that?
Right.
All right, great. All right, let's move along. Let's get to the real nitty gritty of this stuff here, guy, because this is what I'm real excited about. Let's talk about debt collection, because some of you guys, I have talked to some people recently about this stuff here, and and this is something you really need to know about the debt collection industry. Because some of you, and I don't know who, but I'm just going to say, I'm pretty fair to say, I'm pretty fair to say that some of you are experiencing this right now. Some of you are getting calls from debt collectors right now. Well, you call them debt collectors; they're debt buyers. Write that down. Because back in the day, people used to say debt collector, debt collector, debt collector. There really pretty much aren't really any debt collectors anymore. They're called debt buyers. And what debt buyers do, just the way their name sounds, they buy debt. They buy bad debt that consumers have failed to make payments on for at least 6 months. When you don't make a payment for 6 months with your original creditor, they assume that that debt is not payable anymore. So what they do, they sell it for pennies on the dollar. And I'm really hoping you guys write this down because this is going to change your life drastically in the future for anybody who's going to be experiencing this. Now, this is what I mean when I say this. When you are experiencing a debt collector or debt buyer, I'm going to use the word that you guys are used to, debt collector, because I don't want to throw you off on anything. But I'm really talking about debt buyers. They're the same thing. A debt collector is a debt buyer. Everybody got me? Okay. A debt buyer is a debt collector as well, and they have to follow the guidelines of the Fair Debt Collection Practices Act. Now, with that being said, what did that mean and how did that benefit you? You know, I hear so often that people say, oh, they don't answer their phone because they say, oh, that's a debt collector, or that's a debt collector, that's a debt collector. Guys, I'm here to tell you if you answer the phone and find out who that debt collector is, write that name down, write down the time that they called you, the number that they called you from, and save it on your phone. That is money in your pocket. Why is it money in your pocket, Mr. Demetra? Because one, they're using what we call a auto dialer to call you. When you pick up that phone and say hello, you're going to hear a 2 or 3 second delay before someone comes on, right? So that tells you that they're using an auto dialer. So here's how it works. You pick up the phone, you say hello, you hear a 2 or 3 second delay before someone comes on, or you hear this little some kind of strange sound. That's an auto dialer because you was parked in a number system. You were parked before into the next, I'm sorry, until the next available representative or debt collector agent answered that call. They got headsets on just like I have. Okay. They see your name pop up on the screen. They have the information, limited amount of information about you. Then they'll say, hi, I'm calling, this is such and such calling for Mr. Wayne DeMatra. Or they'll just say Wayne DeMatra. And then you say, this is Wayne DeMatra. And then they'll say, well, this is ABC Financial Services. This is an attempt to collect the debt. Any information obtained will be used for that purpose. That's called a mini Mirandi. The call is being pre-recorded. Now, if they tell you that the call is being pre-recorded, guess what? You can record it too. They're going to tell you, you let them know, listen, I'm going to be recording you as well. Oh, no, 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 you can't record us. Well, what you mean I can't record you? You recorded me. So when they told you that the call is being recorded, they just gave you permission as well to record the call also, even though in the state of Illinois, we are in a one-party state, which means you have to ask permission to record someone. They just straight out tell you that the call is being recorded. They don't tell you, they don't ask permission, right? They'll just go ahead and record the call. But let me fast forward on that. When you get in a call from a debt collector, first of all, they do not own that debt. You are what they call the unsophisticated consumer. They want you to believe that they own the debt. There's a difference between you owing a debt, write this down, you owing a debt and them owning the debt. Because when they own a debt, well, let me back up. When they claim that they own a debt, they have to show proof that they own that debt. How can they show proof? It's called a bill of sale. When they sue you, first of all, this is how a debt buyer slash debt collector win their lawsuits against any consumer. It's because one, when you get sued, you're going to be served. In the state of Illinois, they have to serve you. In the state of Indiana, they have to personally serve you at your place of residence. Not at your mother's house, not at your father's house, not at your in-laws' house. It have to be the place where you lay your head at and where you pay your rent or your mortgage. Everybody got me on that? Show of hands for those I can see. All right.
Got it.
Now, listen to me clearly. When they sue you, they send out on the paperwork, it says bill of sale. On that bill of sale, nowhere on that bill of sale does it has your name or your account number. So that's just nothing more but a piece of paper with some ink on it. Don't mean nothing, Write that down. Okay. Also, on the complaint, this is how people lose with debt collectors slash debt buyers. Listen to this and write this down. Because whenever you're being sued, you're going to have a complaint behind that summons. And that complaint is going to have number one, two, three, four, five, six, seven, whatever. It could say 12, it could say 15 things. You must, within a certain amount of days, must answer that complaint by admit or deny. You have to do that before the deadline date. If it's a civil case, you have 30 days in the state of Illinois. I'm assuming everybody's on this call is from Illinois. Okay. So let's go with the assumption that everybody here is from Illinois. And if you're from Indiana, that applies to Indiana as well. But let's say you have 30 days to answer that complaint. Number one, it says here the plaintiff, I'm sorry, defendant opened up an account with us on blah blah blah. First of all, you didn't open up an account with a debt collector. Here's a question I want to ask you guys. I want everybody to jump off of mute for 1 second. Everybody jump off of mute. Quickly, quickly, quickly. Okay, here's my question to you. On the terms of a debt collector, did a debt collector provide you with any service?
No,
No. No.
No.
Did a debt collector provide you with any product?
no,
No.
Did they approve you for a loan?
no,
No.
Did they provide you with a credit card?
no,
No.
Did they wash your car?
no.
So how is it that a debt collector can claim that you owe them anything when there's no agreement or no service, no product, no nothing that's been granted from them? Can anybody answer that?
They have
They can.
failed to.
I'm sorry?
They have failed to.
They're filthy?
They have failed.
Oh,
do
there you go. That's absolutely correct. Absolutely correct. Because debt collectors or debt buyers, they cannot prove ownership. I'm suing right now today in the U.S. District Court, Northern District of Illinois, downtown Chicago for a client. We have a company by the name of Midland Credit in federal court right now. Thought I had it around here, but in federal court right now for $900,000+ for the violation of the Fair Debt Collection Practice Act, the Fair Credit Reporting Act, the Truth in Lending Act, the Telephone Consumer Protection Act. And I'm going to jump into that real quick in a second. But we got them in there because I know with a shadow of a doubt that they cannot prove that they have ownership of the debt, number one. Number two, the reason why we're suing them, because they contacted my client who was taking care of her infant grandson, okay, at her home. And what happens is that every time that they will call her, they will interrupt her grandson's sleep and cause her grandson to wake up and crying. And now everybody knows how that goes if you have children, so we all know how that works out, right? Especially when you're dealing with an infant. So therefore, that is called emotional distress. In legal terms, that's emotional distress, and it's real serious. They take that very serious. That means that they're affecting your household lifestyle, okay? Because they're calling you at an inconvenient time. And she told them under my instructions, she said, I want you to cease and desist from this call. But first she told them, let me back up. We didn't say cease and desist at first. We said, I refuse. Write this down. You get a call from the debt buyer, debt collector. This is what you want to say to them. I refuse to pay this alleged debt. I refuse to pay this alleged debt. That is another form of saying cease and desist. Okay? That is another form of saying cease and desist. Because if I tell you as a debt collector, you're a debt collector, and I tell you that I refuse to pay this alleged debt, what's the purpose for you to call me back again? What are we going to talk about if I told you that I refuse to pay this alleged debt? Does that make sense? Show of hands for those that I can see. Okay.
Don't make sense at all.
Don't make sense at all. And we always say if it don't make sense, it don't make dollars, right?
Right?
All right. Now, with that being said, guys, debt collectors, if they call your phone, answer the phone, do a screenshot, send that to your email so you can preserve that evidence. Okay. That's called evidence. We're going to use that when we get ready to go after them. Now, keep in mind, I'm going to say this disclaimer again for those who wasn't on the call earlier. I'm going to do another disclaimer since I see we got a lot more people on here. The disclaimer is this, is that my name is Wayne DeMontra, aka the Credit Master. I've been doing this business for over 45 years. I've been suing debt collectors for the last 11 years of those 45 years. Okay, I'm self-taught. And here's my disclaimer. I am not an attorney. I may sound like an attorney, but I am not an attorney. I do not give legal advice. The information that you're receiving today is for information and educational purposes only. So everybody, we clear on that?
We clear.
All right, great. Now, if you're looking for legal advice or anything, I would say you definitely have to seek a competent attorney. All right. Good luck on that one, but you have to seek a competent attorney. Okay. I go toe to toe with any attorney out there when it comes to credit, and so good luck on them trying to beat me on that. I was a credit expert in the court of law 9 times, as Mr. Brian said earlier, where I was hired to come in as an expert witness. I don't know if a lot of you guys saw that movie, My Cousin Vinny. But my cousin Vinny, I love that movie because in one part of that movie, is his girlfriend or fiance was in court, and she was talking about the torque and the traction of the certain type of vehicle and everything. Well, that's me. That's me when it comes to credit. Okay, it's nothing that an attorney could tell me about the Fair Debt Collection Practice Act, the Fair Credit Reporting Act, the Equal Credit Opportunity Act, the Truth in Lending Act, any of those acts. I'm self-taught. I back in 1980, I took 2 years. I was when I lived in Minnesota, I went to the Hennepin County Law Library 6 days a week, Monday through Saturday until they closed. And I learned the Fair Debt Collection Practice Act, all of these acts that I'm telling you that I help with people today. Okay. And I'm self-taught and I'm damn good at what I do. Okay. So one thing I'm gonna say is this, is that uh again, when dealing with debt collectors, don't be afraid of them. The thing is, let me tell you how they win their cases. Let me tell you how they win their cases. First, as I said earlier, they win their case number one because people don't answer the complaint. You got to answer that complaint. So if that complaint has one, two, three, four, five, six, seven, oh, did I lose you? Something happened here. Bear with me. That's on my end. Okay, there we go. Okay. If that complaint has one, two, three, four, five, six, seven, eight, 9 items, you got to say answer one. Deny or demit. Deny or demit. Deny or demit. You got to admit it. The only thing you're going to admit on there is your name and your address. Everything else gets denied. Everything else gets denied. When they tell you that you owe a debt, did you see the original creditor's name as a plaintiff on there? No, you saw the debt buyer's name as the plaintiff. So if you ever have a problem with that, you definitely make sure you give me a call. Definitely oops, someone's trying to call me. That's okay. That's class reunion stuff. We're good. So what you want to do is that you want to make sure that you contact me if you have any problems with a debt collector, if you received a summons or anything recently or past 30 days ago. If you got past 30 days ago, we got some work to do because we got to get you out of the default. Because you will be in default if you don't answer this by a certain period of time. Okay. So I just want to make sure that we're clear on that. The other thing I want to talk about real quick here is, bear with me a second. Credit reports. I have not found a credit report yet that was accurate. And what do I mean by that? I'm gonna talk about Equifax first of all. Equifax always, if you look at your Equifax credit report, if you have one around, if you got all three like TransUnion, Experian, and Equifax, look at the date on Equifax for every date that they report. They always say it's the first day of that month, like August 1st, June 1st, February 1st, whatever the case may be. They're going to always say that it was the first day of the month. That's going to be inaccurate out the door. Then they also say that your balance is really your high credit limit. Nope. That's your own, that's their internal way of doing things. But the Fair Credit Reporting Act says no, 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 no. Balance means balance. High credit limit means high credit limit. Just because your internal policy says this, the federal law says this, and that's what you go by. There's nothing else to say about that part. Okay. So when you look at your credit, you are entitled, listen to me clearly and write this down, 100% maximum accuracy on your credit report, not 99.5, not 99.9. Some of you guys here have credit monitoring service. Some of you guys, I know people tell me I got Experian. I look at Credit Karma. Folks, take Credit Karma off of your phone. It is not accurate information. That is not your FICO. FICO, FICO, stand for Fair Isaac Company. Fair Isaac Company. There's two gentlemen who came out with the FICO score. None of your car dealerships, your mortgage servicers, companies, or anything like that uses those scores with the Credit Karma. Those are called Advantage scores. Advantage scores. They're not FICO scores. No one uses it. That score can be off by 30 points, 40 points, 50 points. Okay. It is not your real score. Some people, I can begin to tell you how many. I got a lady right now. Every time you pull it, it's a inquiry. I have one lady right now. She has 82 Credit Karma inquiries. Why do you need to pull your credit every 30 days or look up your stuff every 30 days? I'm sorry. I said every 30 days, every other day. Folks, your credit report do not change. It does not change until the next 30 days. So when you pull it and it's not good, it's good for 30 days. So nothing's going to change within that 30 days. Anyway, the only way it can change if your original creditor or someone did what they call a credit boost, a credit boost. That's the only way it's going to change. And if you know they didn't do a credit boost per your permission, then you know it's not going to change. Everybody got me on that? Let me see your hands.
Right?
All right. Now, don't pull your credit just to be pulling it like that. But you can get companies like Identity IQ. That's where I send a lot of my clients to. That's associated with my credit software. That's where to line up all your accounts side by side. It'll show me your Macy's account, what they told TransUnion, what they told Experian, and what they told Equifax, side by side. I go all the way across the line to see if they're telling one different from the other one. Keep in mind, Equifax is going to be different anyway because it's what? It's always going to show the first day of the month. Okay. So that's going to be inaccurate out the door. Go across that report. If you see anything different, for example, the one that you're looking for is called the date last active or date last payment. The date last payment, that's what sets your 7-year statute of limitation. The date of last payment sets your 7-year statute of limitation. Now, if you see TransUnion saying your date of last payment was done on, say, I'm gonna keep it simple, let's say January 9th of 2023, but here you get they told the furniture, I'm talking about the furniture now, the furniture told Experian that it was February 4th of 2021, and then Equifax is going to say October 1st. Remember, they always say the first, October 1st of 2020. My question to you is this: which one is right? I can tell you which one is right. Usually, the one that's right is the one that's the latest. Okay. The 2020, I should say, the 2020 is going to be the true one. But see, if you let them get away with that 2023 one and that 2021 one, that's going to be coming off your credit reports 3 different times. Do everybody follow me when I said that?
Right.
7 years from the 2023, 7 years from the one that's reporting 21, the year 2021, 7 years from the 2020. So that means it's going to fall off 3 different separate times, guys. It's supposed to be the same number, the same dates. How is it that a furnisher telling TransUnion this about the same account, but they telling Experian something different and telling Equifax something different for the same account? Now, here's the kicker. Write this one down. If you see a debt collection activity on your credit report and it does not have the original creditor's name right next to that name, that's an automatic deletion. You ain't got to write a whole spiel about that. Tell them to remove it off your credit report right away for failure to put the original creditor's name on that report. If you see the word open account on a debt collection on your credit report, for those of you looking at your credit reports right now, if you see a debt collection activity on your credit report and it says open account, debt collection cannot be open accounts. You're not making payments with them. Never admit to a debt collector that you owe a debt. Only thing you want to say to a debt collector is this. Here's the call. Hello? Hi, may I speak to Wayne DeMatra? This is Wayne DeMatra. Mr. Matra, this is ABC Financial Services here. We're a debt collection company. This is an attempt to collect a debt. Any information obtained will be used for that purpose. Okay, sir, could you verify your last name or your address? No. I don't know who you are. Now, keep in mind, guys, let me pause for a second. with all this technology that we got out here with this AI, with Photoshop, with all of this stuff that's going on, can you honestly think or know that you're talking to a real person on that line, especially with this
No.
AI? Because this person could sound just like that somebody else. We got people sounding like Kevin Hart. I mean, that just blows me away. We got people sounding like people on AI. AI is gonna, man, it's gonna replace a lot of stuff. It's gonna replace the court system. It's gonna replace lawyers. It's gonna replace a whole lot of folks. Okay, think about it. See, I think different than your average person. Believe me when I tell you that. When I go into a casino or something like that for fun or something like that, I'm there for the fun. But I look at people different in the casino. I look at people at the casino like this. These are people in the casino who's trying to, a lot of them, not all of them, but a lot of them, majority, are there to try to save their home. They got the money to pay for their mortgage, and but the bottom line is that they're trying to win some extra money. Can I ask a question? What the heck is extra money? What is
Ooh,
extra money? You know, and then they're
it's
trying.
like overflow.
Good luck with
Extra
that one,
money,
right?
overflow. That's that money you. That's like having money to go blow at a strip club or something.
Well, what happens with that overflow money is that they got the money to pay for that mortgage payment, but they're trying to win that extra money, but then they lose that extra flow money or that overflow money, trying to win that extra money. Now they're in a real panic. Or they trying to run from the repo man. I can begin to tell you how many times I've seen a repo truck at a casino in their garage, overhead garage, trying to repo, and the security caught them every time. Back then when I used to do the casinos like that. Um, but believe me, I was in control of all of that. So where I've seen security stop the repo man from doing that. Now you go to a Walmart. People don't understand this. For those who don't know, if you got a dang on car that's subject to repossession, they have tow trucks that's riding up and down these grocery store parking lots with these little fancy looking little scanner like cameras on there that scans your license plate. And what it does is that it don't have to be one particular company like it used to back in the day. Everybody, any company, repo company now can take your vehicle. The one that finds you first is the one that gets paid that commission. And they ride up and down every single aisle at Walmarts and at your Target stores and all of these places at these malls to see who they can get. And they get them quick. I've seen it too many times. Okay. Now, with that being said, see, I got a few more minutes here. Um, I'm going to open it up real quick here. You guys can come off and mute, and if you got some questions, I'm gonna ask that everybody don't speak at the same time. But if you can come off and mute if you got a question, or just raise your hand, and I'll let Mr. Brian go ahead and control that part of it. So if you guys got a question so far, you can definitely don't feel shame, man. If you got a question, it'd be a shame if you got me on this line with this type of knowledge and you got a situation. Forget about the person that's on the line. Hey, handle your situation and let's talk about it. So anybody got a question, come off and mute and let's talk.
So I just deleted Credit Karma off my phone. What's a good service I need to use so I don't be doing 1,000 inquiries into my credit?
Right. The one that I'm going to recommend is Identity IQ. Okay, you're gonna pay a monthly service fee, but it's absolutely worth it. But also that's for the credit monitoring. But then also I have a company. I'll send you the link, brother Carter, for a and for those who are interested, a service that I even use that will help you, even let you know if you have child molesters in your neighborhood, if you got grandchildren around. But it's also I'm gonna give you guys the information. I'm gonna leave my information real quick for those who don't have it. You can reach me at Credit Masters. Can anybody see my shirt here? Credit Masters 40. You can see I sue debt collectors. I wear this shirt religiously. I don't know if you can see that. That's Credit Masters, the number 40 at gmail.com. Again, that's Credit Masters with the S on the end, the number 40 at gmail.com. And just send on there, just shoot me some information. If you want to talk to me privately, you can do that if you didn't want to put your question out on up here with everybody. But I ask that if you're sincere about getting yourself together, definitely hit me up on that. It may seem to you that when you do retain me or something like that, it may seem sometime that you may think the process is not taking uh, 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 You may think that it's taking too long. Guys, trust me. I don't put files on my desk just to have them sitting there. Okay. I get those things in there and get them out as quickly as possible. Every case is different, but you can rest assured that I can roll this stuff off just like that. But again, every case is different. Give you an example. I took someone's repossession off in 2 weeks. I just did another repossession. It took me 3 months. Okay. It all depends on the steps that we're doing with things. Okay. Um, Again, if you have any issues with debt collectors, debt companies, or anything like that, definitely reach out to me on that. Now, earlier I mentioned to you about debt credit reporting agencies and credit reports. Listen to me clearly. One, there's no such thing as a credit report. I wish I could see some of y'all faces when I say this. There's no such thing as a credit report. It's called a consumer credit file. If you sued a credit reporting agency and you told them about a credit report, you'll lose your case because they say, Your Honor, we don't do credit reports. We have consumer credit files. All right, write that down. The next thing I'm gonna tell you is this: there's no such thing as a credit bureau. There's no such thing as a credit bureau. Jump off of mute, everybody. Jump off of mute. I want everybody off of mute because I got a question for you. When you hear the word bureau, what is the first thing you think of?
IRS.
Yeah.
FBI.
IRS.
You hear government, right?
Yeah.
Yeah.
Credit reporting agency. They call CRAs, credit reporting agencies. If you sue TransUnion, Experian, and Equifax, and you listed them in your complaint as a credit bureau, you will lose your case. I've seen it happen several times. They'll say, Your Honor, we're not a credit bureau. We're not a governmental agency. They are a private entity who make money from the big three, like LexisNexis sells your information to TransUnion, Experian, Equifax, and Novus, LCI. These are companies, these are just to name a few, man. It's like I said, it's over 250 of them. Okay. They make money every time you have your information on a credit file. Now, if you ever hear me say credit report, it's because that's what you guys are used to hearing. So I want to talk layman's talk, if that makes sense. Okay. But in reality, I'm telling you consumer credit file. Okay.
Brother Demontra, looks like David Pugh has his hand raised.
David Pugh, okay, go ahead.
Yes. Good evening, Brother Demontra. Thanks again for this
Brother
great
Pugh, how you
presentation.
doing, sir?
Quick question. Yeah, I'm doing well, sir. How are you?
I'm fantastic. Thank you.
Yeah, yeah, great, great. You mentioned about the Credit Karma and the other one. I mean, I have been using the My FICO monitoring system. What are your thoughts on that as far as,
My FICO, my
accuracy and
FICO is
things of
good.
that?
My FICO is great
Okay,
because
okay,
that is your FICO score.
right, right.
But if you need to pull your now, let's say for example, if someone come to me and they want to sue the credit reporting agencies, we don't use the my FICOs, we don't use the identity IQ. You got to go to annualcreditreport.com. Write that down, guys. Annualcreditreport.com. Don't request your credit score because you request a credit score is going to be a charge for it. You don't need the credit score, but you can get it every single week. You can pull that every single week. I don't see why people need to pull it every week, but it's only good for 30 days. Um, annualcreditreport.com. You don't need a credit card. You don't need a debit card or anything. If you're on the site where they're asking you for that, uh, you would not need that. Jeremy says that LexisNexis won't submit my request.
Thank you.
Uh, what they're going to do. Okay, thank you, sir. Did I answer that question, Brother Pugh?
Yes, sir. Thank you.
Okay. Okay. So someone asked a question about LexisNexis won't accept their request. You have to go, you can contact LexisNexis. It's not a short intake information. They got to get some information and then they're gonna send you they're gonna mail you a PIN number. Okay, because they're gonna go through the ringers with you to make sure that you are you. So I just want you guys to know that. So pull that LexisNexis as soon as you can. All right. Um, okay, Jeremy, great. All right. Anybody have any questions real quick? I get the floor open for questions. We don't have too much time, but I want to make sure I get to everybody's questions so far.
When buying a vehicle, is it better to pay it off when you buy it or get it on credit and pay it off within a year?
If your credit warrants you to purchase that vehicle and get it financed, I would say get it so it can hit your credit file. Okay. So you can get credit for that. Because if
Right.
you just pay straight out cash, you won't get credit for it.
Okay.
When I mean getting credit for it, that means it's not going to be reported on your TransUnion, your Spirit, or your Equifax. So if you go ahead and let it hit the credit file, right? And then what you can do, you can go ahead and pay it off within that 6 month period. Okay.
Okay.
Now, if you don't want them to get any uh if you don't want them to get any interest, most dealerships or finance companies, what they do is that they give you an extra 30 days or 60 days, 0% interest, depending on your credit, right? They'll give you 0% interest. Take advantage of that if you can. If you're paying a high interest rate on an automobile right now, I'm gonna tell you straight out because anybody knows me know I shoot from the hip. You are actually married to that vehicle. Okay. So hit me up on my credit masters number 40 at gmail.com. Creditmaster40 at gmail.com. If you got any questions, we can get more in depth to that because we're actually running out of time here in a minute. I just want to get a few more questions in and share something with you. How many people here with a show of hands have own a home that you're paying on a mortgage right now? With a show of hands, real quick. Okay. So for those who I can't see, I just see your names. Okay, I'm assuming some of you have a home. Let me tell you the right way to pay for a house here, real quick, to pay a house off. I hear a lot of times people say, "Oh man, I wish I had a house like that," or something like that, or "How can I get a house like that?" The thing is that there's two ways to pay off a mortgage. The first one is your regular check. A lot of people they fell for the okey doke in the credit industry where they do everything online. Yes, it's for convenience, but guess who the convenience is really for? It's for them, not you. It's for them, not you. I'm gonna say it again. It's for them, not you. A lot of people tell me, "Oh, I don't even have checks no more." You should get checks from your bank. They still free checking. Okay, get some checks. If you own a home, write your mortgage payment with a check. With a check. Two ticket items you need to be writing checks for. That's your car and your home. Your car and your home. Everything else you can do whatever, but make sure you write that home mortgage off with a check. With that home mortgage, you want to use two checks. Why do I need two checks? Anybody here ever heard someone saying that they pay their mortgage off early? They pay an extra $50 toward their mortgage. Show of hands.
I've heard
Okay.
about that.
Anybody here on this call ever done that? You just write an extra $50 or $100 onto their mortgage payment. Okay, let me tell you, you're doing it the wrong way. If you just write an extra $50 or $100 on a check and you just telling them to apply this to your mortgage, they're gonna do just that. Now, if you got a mortgage of say, let me keep the number simple. If you got a mortgage payment of say $200,000, right? And you write a check, and let's say out of the $200,000, let's say your payment is 1,400. I'm being real conservative. Say that number is $1,400. Okay, is what you're paying a month. Out of that $1,400, the principal only. How we looking, Mr. Bryan?
It's 303.
Well, oh, I didn't know which one you were talking
You,
about.
sir. You, John Bryan. You,
Oh,
sir.
okay. Yeah, we're 3 minutes over right now.
Okay, let me sum this up and I'm gonna be done. Is that good?
Yep, good to go.
Okay. Let's say you have a $1,400 monthly payment on your mortgage. And out of that $1,400, we know about $40 of that is going toward your principal. Okay. Everybody got me?
Mhm.
Okay.
Mhm.
And the balance of that is actually going towards your interest. So bear with me 1 second. 1 second. So we're looking at about 1360 is going towards your interest. Is that fair to say?
Yeah.
Okay, watch this. Listen to me clearly for those of you who doing mortgages, okay? Out of $1,400 a month payment, $40 of that is going towards your principal, and then the 1,300 is going toward the interest. If you got a 30-year mortgage, the first 15 year of this of your payments is going toward it's the interest. That's paying the bank. Now, how you can avoid from paying the bank, taking check number one. Let's say you with ABC mortgage services, okay? You're gonna take your first check for the $1,400. You're going to take a second check of the $40 principal payments. This is the right way to do it if you're going to do it that way. Let's say you're going to do 5 months of principal only payments, right? That's an extra $200. I'm just using it for an example for the people who can afford to do this. This is all hypothetical, okay? Now, on that first check, you're going to make your regular $1,400 check to that financial services company, that mortgage company. The second check is going to be for principal payment numbers only. Let's say that you just got your house and you're on your fifth month payment, so you're on payment number 5. So you make a principal payment number 6, 7, 8, 9, and 10, but you're on payment number 5, and you're going to do a second check for $40 for um, uh, payment 6, 7, 8, 9, and 10. So that's $200. And you're on payment number 5 right now. What payment are you on next month? What payment are you on next month? You're on payment number 5 right now. What payment are you on next month when you do
Payment,
your principal only payments?
payment number 6.
Okay, who all say 6? Show of hands. Okay,
11.
11.
You're on
And
10.
niece, I see a niece on there. Okay, 11. Who said 10?
You're on
10?
10.
Okay, so
Because
I
you
got one
paid
11, I
extra.
got a 10, I got a 6. Is that it?
Or we said 12.
Okay, and somebody said 12. The person who said 11 is correct.
Wait, hold on. How do you skip? How do you?
You
Because
Okay,
paying
here's
Ron,
your
6
answer. I
through
know your question.
10.
I know your
extra
question. I know your
200 was
question. Let
on
me answer it
Okay.
right now. Let
the
me
extra
answer right now.
200 was on a
Here, here,
principal
here it
payment
is.
for the next 2 months.
Here's your answer. Here's your answer. If you're on payment number 5 right now,
Mhm.
right? That means you're on payment number 60, right? I'm sorry. Did I misspeak on that one? That you're on your fifth payment, okay? Payment
Right.
number 5, right?
Mm-hmm.
On your amortization schedule, you're going to request an amortization schedule.
Mm-hmm.
Amortization schedule is a document that shows your whole entire 30-year mortgage. All right. Now
Mm-hmm.
watch this. You pay your first check of $1,400. You're going to take your second check and you're going to do 5 principal only payments of $40. Principal payment number. If you're on payment number 5, your $1,400 check is covering principal payment number 5, right?
Yeah.
Right.
Right.
Now, that second check is going to cover principal payment number 6, 7, that's 40, 40, 40, 40, 40. 4, 8, 12, 16, 20. That's $200, right? Right?
Yes.
Yeah.
Yes. Yep.
So that means that you just paid principal payment number 6, 7, 8, 9, 10. In the memo section of that second check, you're going to put apply to principal payment number. Don't put 6-10, put 6, comma, 7, comma, 8, comma, 9, comma, 10. You
So I
want to be
didn't do
real
that
specific.
part. I
Okay,
put
watch this, watch this, watch this, watch this. Because mortgage law says that you cannot be charged interest for a principal that has been prepaid. I'm gonna
so
say that again,
I didn't put I just put principal apply to principal only. I didn't put
but you
the
didn't tell them which
specific
principal.
ones. Yeah.
That's right. You got to tell them where to put your money exactly. So let me sum this up real quick, and I'm gonna be done. So the first check again is for the $1,400 for payment number 5. Whatever payment you on, you don't know what payment you on until you get the amortization schedule. You want a 4. Write this down, guys. 4 FULL 4 amortization schedule. If you got a 30-year mortgage, it's going to show you payments number 1 to 360. If you have a 15-year mortgage, it's going to show you payment from 1 to 180. Okay. This is going to show you how to cut a 30-year mortgage off and have it paid off in about 13 to 14 years. If you got a 15-year mortgage, it's going to show you how to wipe it out in about 5 to 6 years.
Wish I'd known that when I switched to 15.
That's why I don't believe in refinancing. You don't need to refinance
Interesting.
if you have this knowledge. Make sense?
Yeah.
So with that being said, so you got $200 that you done put out there. So when it comes tax times, guys, don't go to the Nike store for your homeowner. Don't go to the Nike store. Take that money, invest it into your property. Invest it into getting that mortgage swiped out. Can you do the same thing to an automobile? Yes, but guess what? An automobile is not set up the same way as a loan of a mortgage that's stretched out to 30 years. Do
Mhm.
not finance a car more than 5 years.
Mhm.
Take your car when you buy a car and get it at 5 years max. Don't go past that. Keep in mind, you're not there to convenience them. You convenience yourself. Oh, those payments look real good at 72 months, but guess what? So did that interest rate look good to them too.
Mhm.
Okay,
Right.
it's all about that interest rate, guys. How
Mhm.
much money can you keep in your pocket? Well, guys, listen, I don't want to take up too much
Oh,
time
wait,
here. I
wait,
already
you
went over, but
we got a
Before
question
you
for
go,
you.
I have one last
Uh,
Got a
question.
question. I check
but
for
we
interest and I
yeah.
check for principal with, I didn't catch that one for
No,
what
he
else?
says one. Is there one check for interest and one check for principal with five principal? Or he's saying when you write that principal only check, do you put all that on just one check?
Yeah, but
So,
in the
so
memo,
Wait,
you
wait, wait. Are
indicate
you asking if you're making a mortgage payment? Are you asking do you take
no
the
principal
mortgage check for 1,400 and put that in the principal payments on there too? Is that what
yeah,
you're asking?
yes, yeah. He asking.
No, no.
He asking
separate
if
check for principal.
one check for principal, well, one check for your normal mortgage, then you
Yes.
Right.
say a separate check for interest only.
Principal only
Oh,
payments.
I'm sorry,
Principal.
principal only. Do you place for on that one check? Do you have all of the? You want to do multiple principals on there? Do all
Yes.
of them go
Yes,
on one check
in the memo section.
in the
Let's say
memo?
for this example, you're on payment number 5, so you got your $1,400 check. That's the first check, right?
Hmm.
The second check is going to say to that same mortgage servicer, right?
Hmm.
In the memo section, is going to say apply, get it all on that one line. Apply to principal payment number. The next payment, 6, comma, 7, comma, 8, comma, 9, comma, 10. Don't put 6-10 because you're just telling them 6 and 10. They're going to play dumb if you let them play dumb, and
Mm,
check it every 3 to 6 months to make sure that $1,360 is minus off of your account every time you do it. Because when you do those 500, watch this, guys. I'm finna blow you guys' mind. Just for paying an extra $200 with this example that I gave you with a $1,400 mortgage, paying $40 5 months straight with principal only payments, you wiped out $6,800
that's what's up.
off of your balance for making those principal only payments. Mortgage law says you cannot be charged interest for principal that's been prepaid. These are called prepaid principals.
And then whatever we say, we got to send it to you.
No, sounds good though, but no. Okay, so that's what I want to share with you guys about that. I'm sure later down the road we'll do something bigger on this scale with the credit and everything. Because I'm going to be planning a credit seminar in the state of Illinois, and I'm gonna get with brother Jerome Bryan with that because I want to actually put that with in conjunction with our lodge with Prince Hall 52, because we're going to be doing some great things to help the community and help people out. And we're going to definitely make sure that we do that. So with that being said, guys, appreciate you guys for being on here, and I'm going to turn it back over to our brother here, Jerome Bryan.
Man, listen, thank you all brothers for taking the time on your Saturday to listen to this information. Like we say, as Prince Hall Masons, and I know everyone on here is not. However, we are really serious about making changes in the aforementioned areas, right? In the areas of finance, our spiritual life, our emotional life, our physical life, right? If we are going to be the best versions of ourselves for all those that depend upon us, our loved ones, as well as for those of who own businesses and everything else. We have to make sure that the best version of ourselves sticks around as long as possible, right? And he sues debt collect. He sued them. You know, I'm used to, where I grew up, I'm used to them suing us. But yeah, but yeah, appreciate you guys, man. This is Dwayne is
Yeah,
he tried
man,
to
that's
come
it.
Y'all see that shirt, right?
in.
I do it every day, every
Hey,
day.
That's what's
I
up,
Demontra,
bro.
love it.
Demontra, one question. Do
Yes,
mortgage banks, do they sell your mortgage once your principal payment is more than your interest, and they sell it off to another
they
company?
sell your account. Look, when I had my mortgage broker business, these guys sell your mortgage. They sell your mortgage before you leave the closing table in most cases.
Mm-hmm.
Yeah, because I
Your
know with
mortgage, I've seen mortgages sell before you left the closing table.
well, no, what I mean is once my principal payment was greater than the interest they were making, they said we ain't making no money, so they sold it off to someone else.
They can't
Because it was
change
like
nothing.
the last 5 years.
Yeah, they can't change it.
They can't.
Your numbers are
Well,
your
no, the
numbers.
payment didn't change. What I'm saying is the bank wasn't making as much or interest
Right.
anymore, so they sold it off to another
Yeah,
company.
they said carry on somebody else's books. Yeah.
Right.
Yep.
Yeah, that's exactly what
Okay.
they're doing. Like Brother Brian said, they're carrying on other companies' books. They're not making the money. Yeah, see, let me say this real quick, guys, because we can go forever with this. Look, the banks don't make money on your mortgage payment. They make money when you default. If you guys look at the word mortician, it's spelled Mortician, mortician, and the word mortgage is Mortgage. The word mort means to death. It means to death. Think of it. Mortician is Mort and mortgage is Mort. It means to death. They don't make money when you make the monthly payments. They make money when you default. If you owe a bank for a home for 400,000 and you get it down to 150,000 and you default on that mortgage, guess how much the insurance get on the 91st day that you defaulted? Guess how much they get? You got it down to 200. You got it down to 200 and what I say 200. Let's say $200,000. How much do they get on that default?
400.
They're gonna get that 400,000 when you default, even though you got it down to 200,000. The insurance is gonna write a check out for 400,000 to them.
Oh,
I made somebody curse. I tell you, we can go along with this thing. That's why, guys, we got to do a seminar. We got to do a seminar. So we're gonna plan that, and I'm praying and hoping that you guys will jump onto that because this is gonna be some very good information. All right.
all right, cool.
All right, sounds good,
All right.
everybody. All right, thanks a lot, brothers, man. Appreciate you all. And we'll be in touch. We'll let you know when what our next topic will be and when our next webinar will be. All right, take care.
All right.
All right. Thank you, guys.
Thanks,
All right. Bye,
everyone.
bye, guys.
Man, look, David Pugh, y'all. He's like one of the most wealthiest brothers within the whole Grand Lodge, and he been holding this.
That's my man. That's my man. He just don't know.
Hey.
That brother there ain't no joke.
Hey, man, I love Prince Hall Lodge 52, but I'm trying to get like y'all. That's it. Y'all have a good one, man.
All right, y'all
All
take
right.
it easy, bro.
All right. Peace.
Oh, that was good.